Live, ladies and gentlemen. We are going to go over a little bit of our market thoughts as it is the weekend, and we are going to be opening up the markets in just a short 48 hours away from where we are approximately right now at 9 a.m. on Saturday here on March 7th. We're going to save some of the COVID-19 information for the last part. I do believe it is a developing story that needs to be watched fairly carefully. It makes a big difference in a way a lot of the markets are going to evolve over this next little while. So with that in mind, we're just going to dive right in, and we're going to take a look first at Bitcoin and then the stock markets, as I believe the potential for a collapse here is not far away. It depends how endemic, and basically what this means, how widespread the virus becomes in the United States. I think that is going to become a very important marker for people to understand. So with that, let's just take a look and dive right in. Boom. Okay, so hope everyone's having a fantastic time. The markets have been wildly volatile, and for anyone trading, that's an exciting thing. As a matter of fact, the traditional stock market has almost been a little bit more volatile than our lovely Bitcoin space. Here we see a beautiful little bull flag starting to form. Again, keeping a close eye on the shorter in-term stuff while trading it's only helpful if you're like either aiming at day trading or finding a position in where we are at this particular moment and waiting for that best position to come to light. A lot of the times, looking at these smaller time frames is not going to be useful in any way, shape, or form for the average investor, and it's best to actually just acquire as you go. Now, none of this is financial advice, but I do want to make it very clear that there is a massive difference between investing and trading, and I think a lot of people kind of miss out on the understanding of that difference. So on the 45-minute time frame here, we're looking bullish for Bitcoin, at least in the interim. And again, a big question here is going to come down to, I think, the volatility on the traditional markets and our relationship to that. Now, in our past videos, we'd actually overlaid Bitcoin and the stock market, and we saw that there's a fairly high degree of correlation, likely because of the money printing and the excitement about new assets. I mean, Tesla exploded this year, so we know that there's a lot of money moving into different sectors, and that money for these assets are generally meant to help others with portfolios increase their net portfolio relationship, right? No one's going out there and trying to lose fucking money. Like, let's go lose as much money as we can today, guys. That's not how any trader or investor works. Everyone's trying to think intelligently and do their due diligence, whether it's from a technical or fundamental standpoint. And right now in the market, I think what is overwhelmingly clear is that we are starting to lean into that there is some serious fundamentals coming to light here, and taking those into account, I think, is going to become more and more important. So really, I'm going to jump over to both the Dow and the S&P 500, and I'm going to take a look at the rate cuts. So here we've seen this massive drop, and for those of you that don't know, and I'm sure there's none of you in the sphere of this any of these thought patterns that don't know, one of the reasons why if not the reason why we saw this stock drop isn't because of the Fed printing money. That used to be the case. We used to assume the boom and bust cycle was from their ability to hike rates and cut them. And we'll go into that here in a short bit, because there is a correlation between rate cuts and markets as well. So it's important to keep an eye on. But more importantly, this was a fundamental change in the way we started to view reality. For all of you tinfoil hat wearers or t-shirt wearers that say I'm stupid, please just I will delete any nonsensible comments in terms of what a pandemic looks like, because it is actually in the right mind frame to panic, or maybe panic is the wrong word, but to at least prepare. We have known for many, many years, decades even, that pandemics were one of the strongest sensible forms of something that could come in and really do a lot of damage to the fabric of society in the way we know it. And this is why the market started to fall. It started to take in the realization that we had infected people come into the United States, right? That there was community transmission in well-adjusted countries like Italy and South Korea, and that the numbers do not look great. As a matter of fact, a 3 to 4% death rate if you're to infect the whole world, is hundreds of millions of people. So let's remember that out of every year, only 56 million people die, right? Every fucking year, only 56 million people die from disease, poverty, cardiovascular, whatever it might be, car crashes, 54 million. And it stays a fairly common average for us over the last decade of around that many people dying. So if you take the world's population at 70%, so it's around 5 billion people, right? And then you take 3.4% of that and you kill them, right? They're gone now in a potentially very short period of time. This is a lot. This is essentially 5 or 6 times the normal annual average for everybody motherfucking dying on the planet, right? And that's important because that leaves a dent everywhere. There's a lot of things that need to be put back in their rightful order if that's what happens. So I really don't think people have taken on and I don't think the markets have fully taken on the consequence of that potential. We've taken on the consequence of just up like the start of an endemic situation here. So the stock market, in my mind, has a room to go a lot lower. And keeping an eye on what the Fed does here is going to be extremely important. We have found some support around the 314-day simple moving average with our bear claw here, this blue line on the outside. Again, guys, we give all these indicators away for free. If you'd like to download this one, just sign up for TradingView, search Arcane Bear. You can download our scripts and you can use this what we call the bear claw. It is basically a rendition of what's also known as a super guppy with these extended edges on the outside that show you the 200 and 314 moving averages. Again, beautiful little indicator. I really like it. You can turn it off too. I mean, I like watching the support areas come in. It's always fun to see. Like here, that was no fun. That was a break moment. We fell very, very quickly. So you can often watch the support and the resistance lines really start to line up and show you where the market is going to go if you are interested in that type of minutia behavior. The Dow Jones, very similar in its drop. We're looking at 10 to 14% on both of these indices. Now, for those of you that are in the traditional markets, keeping an eye on the VIX was obviously your volatility score. This is where you're going to be able to excuse me. This is where you'd be able to play almost as a leveraged bet to some degree in the markets. We've seen a sharp spike down, but we're still holding above 33. We're still holding above $34 for the VIX, which is actually the only time that the VIX has remained this high is when we've been in long-term economic recessions. And that's where we want to get to next. And then asking the question, is the accommodative Fed of the coronavirus right now bullish for the stock market or not? And at least from some of the historical data that we have, we see the rising of these interest rates and then the cut of the interest rates also align with the panic. Now, it's fairly easy to stipulate that the panic was probably buffered by this Fed cut as well, so that as they started to cut rates because the market was going down, they basically continued to like hot potato the rates until they were low enough that they felt that there was a subsequent bottom. Right here you can tell they took time between 2002 and 2003 before they cut them lower to see that positive momentum come in. As soon as they started the positive momentum coming in, they started to raise rates, right, along with that positive market. So there is an alignment here. There is a correlation. So now that we're sitting out here around 2020 and the Fed starts to cut rates, again, this is not an up-to-date chart here, what are we going to expect to see? Now, these are always one of those situations that are probably hard to attribute as, oh, this thing changed and then so did the other. They're likely correlarily related as an emotional response. And I think that's important to understand, that it's not just the Fed cutting rates in unto itself that really drops these down. There's fundamentals at play here that are already pushing the markets lower, and the rates decreasing also help that happen, right? It does increase the ability for companies that already have a lot of money to take out loans. I mean, if we go down to 0% interest rates and you can't start a company with that, you suck. Like, you just suck. I don't know how you couldn't do that well. Like, almost it's such a low interest rate. How you fucking up there? So, and that I think is the predominant question here, is that you see that the ability for the markets to take these hits is also aligned with these market rate cuts. Now, I'm going to dive in here and look at we'll save it to the very end, but a lot of the bear den are in a private bear den. We're watching a trade on Matic right now, and it's just broken out. So for those of you that are in the Matic trade right now and also live with us, that's super exciting. Nice to see. We had not picked a direction. I got stomped out at around 302 yesterday on its way back down, and now we're back. We're jumping. We're jumping out of the triangle here, so it's nice. Lots of momentum and on a little bit lower volume. So, anyways, we'll look at that really quickly. This is much more of a day trader's sentiment in some of these markets. But as you can see, Matic's now jumped up 15% here in the last 24 hours. And it's really just testing this recent high. So now that I look at it, it hasn't fully broken out yet, but it looks like it wants to. And we've seen such enormous volume come swinging into these markets sometimes. If we see another big swing come like that into Matic. And there's a lot of fundamentals under this token. Now, I don't want to digress too far. This is just because we're live right now for everyone that's in that potentially in these trades to keep an eye on it. But I do want to look at gold and the DXY, because I believe that the importance here is understanding more implicitly that if the stock market crashes, I do not believe it bodes well for Bitcoin. Now, to what degree that how much that takes place is uncertain to me. We have the halving coming up here in May, and with that halving, essentially the rewards decrease every time, right? So the amount of Bitcoin that you're rewarded for the mining and hashing power that you put into the cryptographic algorithm to keep the ledger working functionally so that everyone can use the Bitcoin infrastructure effectively, essentially you get paid less now, right? So it decreases it decreases the liquidity for the miners. But it also increases the scarcity, because now less people have more for sale. And if you're relating it to the people that are not selling versus the miners who are selling to keep their equipment up and running and to pay for the electricity, and are a lot of times sacrificing part of their profits, or which would appear as revenues, and ending up with a profit over top of what they had made from all the energy and equipment that they had essentially invested into. So Bitcoin normally, or at least in the past, has gone up during these occasions and spiked quite noticeably. But again, with a fundamental here of something like a potential pandemic, we are in no man's land. Everyone's like, oh, well, we've seen a bowl of SARS. It's like, well, yeah, fucking good God. Thank God we were smart enough to panic then and take it fucking seriously, right? These things are not hoaxes. We've known, like, everybody in the academic community, even the simplest of minds, have known that a pandemic could easily come in and fuck our shit up. And the amount of people and the lack of information that these health ministers have around the world is astounding to me. So I'm going to leave it as a short video today, just because I want to pay more attention to the trading in the background. So maybe we'll even for those of you that want to join the private den, you can go down to the links below. We do a private newsletter, a private group. We take a look at trades. But more importantly, our goal there is just to help empower you to make your own educated financial decisions, because none of this is investment advice. What we want are stronger, better educated, and critically informed members of society and the group that we build. So there is the private newsletter. So I'll be jumping back in there with you guys. It's nice to see these trades do well. But more, again, the important part here is I'm keeping a very close eye on the markets, because between gold dropping, S&P 500, and then some very interesting news around Donald Trump saying how replace the dollar with gold as the global currency to make America great again. I do believe these types of things are going to become more commonplace. And I want to end it off with this. This is a little bit of comedy. A really good friend of mine sent over the other day. This just blows my mind how ill-informed some of these people are. But this is okay. Hold on. Watch this. Watch what Donald Trump says, guys. Like, this shit was just blowing my mind. He says, okay. This is an interview.
If, we have thousands or hundreds of thousands of people that...
Okay, so first off, it was like, we got 1,000 or hundreds of thousands, just this like order of magnitude jump higher, like right out of the gate, making such a cartoonish statement with numbers like, thousands or hundreds of thousands. Like, most people don't, like, let's use dollars as an example here. A lot of people, if they had thousands of dollars versus hundreds of thousands of dollars, make a huge difference in their life, right? Like, orders of magnitude higher. And then this part here, this is just silly. I laughed so hard the first time I saw this.
Get better, but just by, sitting around and even going to work. Some of them go to work, but they get better.
He says, yeah, some people with coronavirus, they get better by like sitting around or going to work, but they go to work and they, some of them get better. Just, Where was he even going with that thought? Anyways, I'll leave it with that. I won't dive into any questions tonight. Maybe I'll go and do a live stream tonight. We'll do a little bit more trading on the live format now that we're kind of back and set up in the bear cave. Really grateful to be here. Give us those thumbs up if you like this content, ladies and gentlemen. I'm probably going to start to focus back again just on the trading videos. I will do COVID updates as it becomes imperative. You know, we have some really statistically high numbers coming out of the United States with 14 dead and 300 confirmed cases. I am assuming that this is the lack of testing that for such a high case fatality rate. But again, just please remember, ladies and gentlemen, if we were to lose 4% of our population, or even 2%, that's a fucking huge number. That's multiple years of the entire world's annual death rate for every single fucking thing that can kill you on this planet snapped into a single year. So please don't ignore the valuable data that's there. Otherwise, you just look like a fool, and I'll go through a great deal of energy to just delete stupid comments from now on, because they don't belong in this space. If you want to wear a tinfoil hat, go start your own fucking YouTube channel and go make up your own ridiculous shit. And if people want to follow that, good. But if anywhere I see it on my social media for the next little while about the total lack of understanding of the importance of stubbing a pandemic very quickly and getting it the fuck out of our society, you really have no idea what you're talking about. Anyways, I'm not upset, but really, ladies and gentlemen, it's not scared here. We should be taking appropriate precautions and trying to stop it before it turns into a pandemic, and that could more easily have been done if we took more drastic measures, but instead it looks like we're going to be dealing this for potentially years to come. So hats off to everyone. Stay safe, stay healthy, stay well informed, and trade. And well, actually don't even have to trade, just enjoy the wealth that you have. Appreciate what there is, and there's almost always more right around the corner. This is Tio with the Arcane Bear. I'm signing off because boom, we got a nice pump in Matic coming in, and we'll see you guys again on the other side. Oh.